JB Cycles with weekend video November the 6th on the big picture. This is kind of a warning that things maybe could change very much very soon. I was planning to say something about the labor market, rates, with the yield curve and so on, but then this guy popped up in my YouTube and he says it does say it much better than I can, so I'll put a link in the description. You know, my point and his point is the labor market is still strong. We have a lot of inflation. The Fed is raising rates, and there's no stop in the rates hikes to see in the short future. So historically, markets, a bear market is not over in this condition when the rates are going up and we see unemployment is not rising and inflation is high, and also the yield curve, or I should say the yield curves are signaling a recession, but so far, the yield curves are not set up for. They're not saying this is over. So, you know, this weekend when call it the big money are looking at the big picture, they could step in here and change things a lot. You know, we are focused. I am focused on short-term cycles, and you know, and traders are thinking, hey, we're above the June lows. Are we about to make a higher low here? Are we starting an uptrend? But if you zoom out, you can see we could be in very big trouble. Where to begin? You know, if we look at, well, where I started, we have the NASDAQ going back to the 70s, and we have broken below the 42-month average. We have broken below the 21-month offset, and we are right on this trend line. And it's a bit similar to the 2000-year top. And if we start to break below here, yeah, you know, earnings are not expected to go up in the coming, say, year or 6 months, but interest rates are rising. You know, can we defend still these high pricing of stocks? If we start to break here, we could see bad things happen. And you know, if we look at the market, if the market realizes we are going into a recession, you know, unemployment in the Eurozone is very low, and in the US it's very low. If you look at, say, energy, you know, energy is a late mover. You see, energy stocks is making to me this looks like a possible topping formation. We have, call it a bear flag here, A, B, C. You know, we could break a little bit higher, but here we have a setup for a top. Could have a fake breakout here, but you know, energy should not lead us out of this bear market. If you look at the FTSE, you know, we have rallied up to the 200-day moving average. So if the market realizes we are going into a recession, rates are still climbing, we have to see inflation coming down, we have to see higher unemployment. This is the exact point where you want to sell. This is as high as you get. this is the best time to get out. If you look at the German DAX, you know, we have broken below this trend line, but we are near the 200-day moving average. Cycle or well, this should be a B, C going down, and then now we are in the consolidation, call it a bear flag pattern, A, B, C, and now we should start the capitulation phase. You know, this, if the market realizes a recession is coming, you know, then this is the best point to get out. If we look at the Norwegian market, well, that disappeared. Well, skip it. Dow Jones Industrial, also here, you know, very strong rally. Also here we should have A, B, C going down, and now we are in the consolidation phase, A, B, C. This is, if I'm correct, you know, this is the best time to get out. This is as high as we can get. And Dow Jones, should Dow Jones break up and lead us out of this bear market? You know, what's strong in the Dow Jones? We have Amgen, what's that? Biotech, that's defensive. Caterpillar, well, industrial, well, I don't know. Chevron, energy should not lead us out of this bear market. Honeywell, industrial, IBM, that's no longer tech, is it? That's more industrial. These are probably making good money, but you know, if a recession is coming, what else? McDonald's, cheap food, or is it really real estate? Anyway, should not lead us out. Merck, biotech, that's defensive. Travelers, that's insurance, I think. That's probably also defensive. United Health, defensive. So no, doesn't look right to me. Oil. Here is the 40-week offset. We are at this point. You know, the 200-day moving average or the 40-week moving average is about to turn down here. You know, if you break below this, going back 40 weeks, if you break down here, we get a declining slope of the 40-week moving average. You know, it looks bullish here. Are we about to break up? We are in we have some indicators look bullish. So, but this should, I think, be a bear flag. So we could go a bit higher. You know, we could go above this line. We can test the average, but should be very close. What else do I have? I think I showed it all. You know, tech, that's more a leading index, and it has broken below the moving average, broken below the offset. Going back, you know, here, the 1990 bear broke down, but it didn't collapse. So, you know, could it stabilize, go just a little bit lower? But you know, with this trend line and earnings and interest rates, you know, we have the potential for a capitulation down here, similar to the tech bubble or 2008. So just a warning, you know, when we are focused on these very short-term cycles and stuff, but looking at the big picture, we could have some really nasty outlook here the coming months. And you know, that corresponds with my outlook from my cycles. We should not stay up here for very long, and in a week or two we should be headed down, soon breaking this low. So let's see. I could be wrong, but yeah. See you in the next one.